In the fast-moving semiconductor industry, strategic partnerships and mega investments can reshape the landscape almost overnight. On September 18, 2025, NVidia announced a $5 billion stake purchase in Intel, representing roughly 5% ownership of the historic chipmaker. The deal not only injects substantial capital into Intel, but also signals a major strategic pivot for both companies, historically rivals in CPUs and GPUs. At first glance, it might seem unusual for a company synonymous with high-performance GPUs and AI infrastructure to invest heavily in a company known for x86 CPUs. But the reasoning becomes clear when one considers NVIDIA's ambitions to create the world's first large-scale CPU plus GPU super SoC system on chip, bridging two traditionally separate hardware architectures into a unified platform for data centers, AI workloads, and personal computing. Historically, Intel and NVIDIA have had a tense relationship. From the mid-2000s through today, their battles spanned licensing disputes, patent lawsuits, and competitive brinkmanship. Despite this, today's announcement demonstrates that strategic alignment can trump rivalry when the potential market opportunity is massive. Analysts estimate the CPU plus GPU super SoC could generate $25 to $50 billion in annual revenue, depending on adoption in data centers, PCs, and edge devices. The financial markets reacted immediately. NVIDIA shares rose 3.49%, reflecting investor optimism about expansion beyond GPUs. Intel stock surged 22.77%, marking its biggest one-day gain in years, as Wall Street interprets NVIDIA's investment as a vote of confidence in Intel's technology and roadmap. Notably, hedge fund investors reportedly profited handsomely. One hedge funder, Leopold Aschenbrenner, realized over $1 billion in gains on his Intel allocation alone. This announcement is more than a financial story. It is a technological and market paradigm shift. By connecting Intel CPUs to NVIDIA GPUs via NVLink, the two companies aim to deliver performance gains previously impossible with separate hardware components. In PCs, a future SoC could integrate Intel x86 cores with NVIDIA RTX GPU capabilities, potentially revolutionizing gaming laptops, AI development machines, and high-end computing. In data centers, NVIDIA's AI infrastructure would benefit from custom Intel x86 CPUs optimized for deep learning workloads, creating efficiency and latency improvements that could redefine large-scale AI deployment. In this video, we'll break down the details of the deal, the technology integration plans, market implications, historical rivalry context, and statements from both CEOs. On September 18th, NVIDIA disclosed a $5 billion investment in Intel, acquiring approximately 5% of the company at $23.28 per share. The announcement coincided with a strategic partnership aimed at co-developing next-generation products for both data center and PC markets. For NVIDIA, this investment is a dual-purpose move. Financially, it diversifies NVIDIA's portfolio and provides equity exposure to a historic chipmaker. Strategically, it secures access to Intel's x86 CPU ecosystem, a critical enabler for NVIDIA's ambitions to integrate CPU and GPU workloads on a single silicon platform. Intel benefits on multiple fronts as well. Aside from the immediate capital infusion, the partnership signals market validation for Intel's roadmap, particularly in the AI and high-performance computing HPC sectors. With NVIDIA as both an investor and partner, Intel gains credibility in AI hardware and data center solutions. The market responded aggressively. NVIDIA's stock jumped 3.49%, while Intel surged 22.77%, reflecting massive investor optimism. Speculation swirled around hedge funds and institutional investors, many of whom likely rebalanced positions to capitalize on the perceived upside. One hedge funder reportedly made over $1 billion in a single day, demonstrating the scale of financial stakes involved. The announcement also included a long-term product roadmap. Both companies plan joint development of multi-generation data center chips and PC SoCs, signaling an era where hardware architectures converge rather than compete. At the heart of this partnership lies deep technology integration. NVidia and Intel aim to bridge the gap between GPUs and CPUs through NVLink, NVIDIA's proprietary high-speed interconnect. NVLink has already proven essential for connecting GPUs in multi-node AI training environments, but the addition of Intel CPUs creates a full-stack, highly optimized computing platform. For data centers, Intel will design custom x86 CPUs tailored specifically for NVIDIA AI infrastructure. These CPUs will focus on latency reduction, AI throughput optimization, and energy efficiency, ensuring that NVIDIA GPUs can achieve maximum performance in large-scale deployments. Data center operators could see significant gains in AI training speed, potentially reducing training costs for advanced models by 10 to 30%, depending on workload. On the PC side, Intel plans to release an x86 SoC with integrated NVIDIA RTX GPUs, creating a new class of gaming and professional laptops. These SoCs will enable high-end AI inferencing, gaming, and content creation without the need for separate discrete components. For consumers, this could mean thinner laptops, lower power consumption, and better performance per watt, all critical factors as laptops push into high-performance AI workloads. The ultimate goal: the world's first large-scale CPU plus GPU super SoC, capable of running AI models, gaming engines, and HPC workloads seamlessly. If successful, it would transform hardware design paradigms, making NVIDIA and Intel central players in the next generation of computing devices. The market reaction to the NVIDIA-Intel deal was immediate and dramatic. NVIDIA shares rose 3.49%, reflecting optimism about entering new markets and deepening its role in integrated computing. Intel stock skyrocketed 22.77%, marking its most significant surge in years, and suggesting that the market views this as validation of Intel's strategic direction. Investors reacted quickly. Hedge funders like Leopold Aschenbrenner reportedly realized over $1 billion in gains, capitalizing on NVIDIA's investment announcement. Beyond individual gains, the broader market perceives this as a signal of collaboration over rivalry, reducing uncertainty about Intel's competitiveness against AMD, TSMC, and other semiconductor giants. U.S. government involvement also adds a layer of complexity. The federal government holds roughly 10% of Intel's shares, while SoftBank has invested $2 billion. These major stakeholders indicate that the partnership has both strategic and political implications, particularly in the race for domestic AI chip manufacturing. Industry analysts predict a $25 to $50 billion annual market opportunity for CPU plus GPU super SoCs, spanning data centers, AI applications, and consumer laptops. Early adoption by cloud providers, AI labs, and gaming PC manufacturers could reshape competitive dynamics, potentially marginalizing companies unable to offer tightly integrated CPU plus GPU platforms. Historically, Intel and NVIDIA have been fierce competitors, embroiled in patent disputes, licensing battles, and market share skirmishes since 2005. For years, NVIDIA sought x86 CPU compatibility, often blocked by Intel's proprietary ecosystem. This deal changes the landscape by providing formal access to Intel technology, enabling NVIDIA to develop system-level solutions previously impossible. The partnership raises speculation about Intel's foundry capabilities. Traditionally, NVIDIA relies on TSMC and Samsung for semiconductor fabrication. Some industry insiders speculate that NVIDIA could tap Intel's foundries for future AI chips, creating a domestic manufacturing ecosystem, and reducing geopolitical risk tied to Asian supply chains. Both companies have remained tight-lipped on this possibility, but the market is watching closely. Analysts view this as a strategic reset. By combining Intel's x86 expertise with NVIDIA's GPU leadership, the companies are positioning themselves as leaders in the AI hardware race, potentially outpacing AMD, Apple, and ARM-based solutions. The partnership also sends a clear message to Wall Street and tech rivals. Collaboration can unlock performance and market opportunities that rivalry alone cannot achieve. NVIDIA CEO Jensen Huang emphasized the revolutionary potential of the collaboration. We'll build a system-level chip fusing CPU and GPU, a revolutionary first. This is not just an incremental step. It is a paradigm shift in computing architecture. Huang highlighted the market potential, estimating $25 to $50 billion per year, spanning data centers, AI infrastructure, and personal computing. He also emphasized NVIDIA's goal to expand beyond traditional GPU markets into personal devices, with roughly 150 million laptops sold annually as a target. Intel's CEO echoed optimism, noting that the partnership transforms Intel from a CPU-focused company into a central enabler of AI-driven super SoCs, expanding its role in both consumer and enterprise markets. The CEOs emphasized that this deal is more than a financial transaction. It is a commitment to joint innovation, integration, and market leadership. For developers, researchers, and enterprise clients, this could mean more powerful, energy-efficient, and AI-optimized computing platforms in the near future. Ultimately, the NVIDIA-Intel collaboration is about technology convergence, market expansion, and strategic foresight. It represents a landmark shift in the semiconductor industry, combining decades of GPU and CPU expertise into a single vision: the CPU+GPU super SoC, poised to redefine computing across every sector from cloud to desktop.